All right, well, welcome to the October edition of the Beyond Wealth Advisors Economic Update. I'm John Cleaver, partner, senior financial advisor, and with me again is Kelly Manning.
Kelly Manning, financial advisor. Hello.
Welcome back, Kelly.
Thank you. I love this.
We would be remiss if we didn't at least acknowledge the fact that it's October.
It's October.
And your Kansas City Royals are
in the playoffs.
All right.
Yay.
Right. So that's the best economic news we got for you today.
Yeah, we're done.
Fantastic. Well, it is an exciting time, and there happens to be a lot going on, so let's jump right in. We're going to talk a little bit about the most recent Fed moves, a little bit about the labor market, and maybe a touch around this thing called the election that's just right around the corner.
Just a touch.
So let's look back first, and then we'll look forward. So last month, we were obviously anticipating and waiting for the Federal Reserve to potentially make a change, of which they did. So after being on pause for about 14 months, they cut by 0.5 point. So the top end of that target range now is 5%. And I think many people saw this as a pretty bold first move. I mean, the economy was actually doing okay. In addition to that, of course, there's lots of speculation about what could come in November, what could come next year. But I think we've all learned that until we get there, it probably doesn't, do a lot of good trying to predict what the Fed's going to do. I think one thing that is really clear, though, the Fed has really shifted their focus. And they've been focused on bringing down inflation, and rightly so. But we've seen this shift now to maintaining this economic expansion. We've seen the economy growing. We've seen it expanding. And the infamous soft landing that they keep talking about, is that in sight? So clearly we've seen a shift. And we saw that shift, and then last week, the labor market, the jobs report came out, and maybe putting a kink in the Fed's plans a little bit. So
quite possibly.
What happened, Kelly?
In the October report for jobs, the labor market added significantly more numbers than expected. It exceeded the economist projections by over 100,000 payroll. So it also showed that unemployment dipped down to 4.1. So those two things, are questioning whether the Fed is going to maybe decrease the rate in December or November.
Right.
But the other thing that happened was wage growth increased as well. So you take all three of those things, and what's really interesting is before this report last week, the markets were pricing in a 53% chance that the Fed was going to decrease rates by at least 0.5 percentage point. Now, with all of this new information, the markets are pricing in 5% chance that the Fed decrease in November.
It's just crazy.
It's crazy. And one economist pointed out that the better than expected jobs report makes it less likely that the Fed moves with the urgency that they moved in September. So again, things are changing, so we just can't predict what the Fed is going to do.
It's just fascinating to me how resilient the economy has been and the consumer, and they just continue to keep kind of chugging along here, and maybe that's a good thing at the end of the day, but we shall see. So,
we shall see.
All right.
But shall we talk about the elephant in the room?
Well, I suppose we should, since we are less than a month away from our U.S. election, and I'm sure some of you, maybe not all of you, have been doing your own poll watching and trying to predict and maybe figure out what's going to happen. And, it's always interesting because we get asked this a lot, does the election really impact the markets? How does it impact the markets? How does it impact the economy? Well, today we're going to talk just a little bit about that, maybe a little teaser, but we're going to focus more specifically on the equity markets. And so let's take a look back again, some of the historical averages. What's quite interesting is, on average in an election year, the S&P actually returns double digits, about 11.5% return on average. And of course, we've had a fairly strong year already, year to date. And partly because, we still have our government's kind of locked up, as they say, what we call split government, right? And so the old adage that government gridlock is good for the market tends to continue to be true.
Yeah.
And so all these things that we hear being talked about are great to talk about. The question is, can any of them really happen? And if they can't, then the market sees that predictability and tends to respond favorably. So gridlock's good. So far it's been a good year. We'll see if it holds true. But what about specifically to the equity markets? Some interesting things that we've noticed looking back.
Well, looking back at it is absolutely fascinating, is value stocks, those stocks that pay a dividend, outperform growth stocks for the 6 month following every presidential election in the last 40 years. And that's remarkable. On average, during that period, that 6 months, value beats growth by 3.5%. Now, overall, value and growth are up, but the value stocks perform higher than those growth stocks.
Although, if we think back over the last few years, I'm not sure anything has been normal.
No. So you just wonder if this is a normal year.
I will say that we've been pretty high on the maintaining a good balance between value and growth. That's been something you've heard us talk about over the last few months, actually. So, all right. So, thinking back, given some of this historical perspective, what do we do? What do we suggest? Well, first of all, just remember, these elections can evoke a range of emotions and discussions around topics like the stock market. There's often overreaction and certainly unwarranted concern. So first and foremost, just try to stay calm. And then, we certainly encourage you to invoke your right to vote. As a U.S. citizen, this is your opportunity to really speak with your vote. As an investor, try to distance yourself just a little bit from kind of the extremes of the rhetoric, right? What we often see is that the markets and the economy tend to carve their own course and their own path going forward. We say this a lot: focus on the fundamentals, good investing, good diversification, focusing on time, not timing, always wins in the long run. And so while we'll look back someday and this will just simply be another little blip in the radar. So, well, that's all good advice, and hopefully you'll maybe heed some of that. What are some other things that we need to be worried about as we think about beyond the election, right? Maybe this thing called the national debt. How do we, it's kind of on the horizon there. No one's really talking about it, but what's coming?
Well, we're not going to hear a political party have their opinion on the national debt, nor how to correct it, because it's going to be a challenge in order to do it. Sure. And they're not going to get elected if they talk about what will happen. But it's important to remember that the U.S. debt is going to be a problem in the future. So on the very first day of the new fiscal year, the debt skyrocketed by $204 billion, and it hit a record high deficit of $35.6 trillion. So the debt to GDP ratio is now at 99%, and it's estimated to be at 116% in the year 2034. Right. So, the Fed, is focused, or we're focusing on the Fed and the monetary policy, but we really need to start looking at the fiscal policy. Right. We really have to figure out what we're going to do to start decreasing that debt. How do you do that? You have to cut spending, or you have to raise taxes.
Sounds like a lose-lose, not a win-win, doesn't it?
Lose-lose.
Yeah, absolutely. And that's really the challenge, right? Because whichever party, whichever idealistic approach attempts to move forward, there's going to be people that aren't necessarily going to like the outcome.
Correct.
And so ultimately, how do we continue to grow beyond that? And can GDP grow and continue to outpace the rate of the national debt? So, as they say, it's definitely coming, and it's something that we're going to have to keep an eye on. Maybe that'll be a topic for a future economic update.
Quite possibly.
So, okay, well, that was a lot. So, yes, so we'll continue to keep an eye on what the Fed may do in November. Certainly, the economy continues to show signs of strength, and that may allow them to continue to move slowly. And the next time we're together, most likely we will have been past the election. So that'll give us something else to talk about.
Something else to talk about.
Fantastic. Well, as always, coming up on the end of the year, it's always a great time to sit down and review. Take some time just to kind of look at everything, year-end review, tax review, capital gains, all those fun things, and get with your advisor to do that. And with that, we will let you go. Have a blessed day.
Bye.